Hey, what's up, guys? Welcome to Fundamental Friday. Today, I wanted to cover which data is most important, right? Because if we're looking at the economic calendar, which makes up a portion of our fundamental analysis, there's a lot of data on there. And so, I'm going to be covering, what I look for, and namely, which data points are most important and which ones you can sort of avoid slash ignore because they're not so important. So let's get right into it. First and foremost, when we're looking at the economic calendar, usually there's low impact news, medium impact news, and high impact news. Some way, somehow, the site sort of separates it into those categories. And first of all, I would ignore and take off. Usually they have like a filter button somewhere. Just get rid of all the low impact news. Get rid of it. You don't need it at all. Right? There's a reason it's low impact because nobody cares about it. And so that leaves you with the medium to high impact news. And, we want to focus obviously more so on the high impact news, but there are some, medium impact news that we need to take into consideration. So, starting off, usually, and these are sort of split. It's going to be employment data. Any type of employment data is going to be very important. We're just going to do EMP, and then also GDP. These are going to be some of the most important figures that the market's going to take into consideration, because overall GDP measures, how the economy is doing overall in a specific country. And so if that's rising, obviously that's very good overall for employment, for company profits, for everybody. It boosts the data for everything else. Inflation, right? So a good GDP is good, and then obviously the opposite happens. If it's a bad GDP, everything else will sort of come down with it. So that's a good sign of where an economy is at. And then employment is another huge piece of data. One, also to see what sort of what the central banks might do if employment is, rapidly increasing. That will give a central bank more inclination to cut interest rates, which you can trade by shorting the currency, right? So these two factors are pretty big. Next up, second most important data points are going to be CPI. So CPI is really important because, this basically measures inflation for the country. It stands for Consumer Price Index. And what that basically means is the cost of goods and services increasing, which is meaning the value of your purchasing power goes down, aka inflation. So obviously, more inflation is perceived as good, less inflation or deflation even is perceived as bad. And it sort of tells also where an economy is at. So these three, which is why it's number one, number two, really can tell you very quickly, what's happening with any particular economy. And so, they're taken into consideration quite heavily. Number three, third piece of data is going to be the sort of brother to CPI, PPI, which is Producer Price Index. So this is sort of measuring inflation, but more so on the producer side. So this is still weighed, but not as much as these ones. And then lastly, number four, it's going to be, let's see if I can actually draw this out, trade balances. I'm just going to put trade balance. So import and export data, right? It'll tell you how much a country's imported versus how much a country exported. That also gives you sort of a sign of how they're doing in the global economy. But it is last place for a reason. It's not quite as important as these ones. And so yeah, these pieces of data are really what you're going to focus on. If these start looking worse over, a given period of time, then, that's a sign to possibly maybe look for selling the currency because the economy is not doing well, heading into a recession, right? And of course, the opposite's true. If these start picking up, things are looking good, you might want to look for possible buying opportunities. So, yeah, guys, I hope this helped. And also, I should note, this is just for data, but something that's listed on the economic calendar, which is really number one, is going to be interest rates. Even though I don't really consider that data, but if you do, that is going to be number one. Interest rates drives the market quite a bit. So you need to know which central banks are looking to cut, hold, raise. This will definitely impact your buying and selling decisions because those factors impact the market. But as far as actual data goes here, just focusing on these ones are going to help you save a lot of time when doing your analysis. You don't need all this mess here, all the little tiny data points. You don't need to worry about it. These are the main ones to focus on. Everything else you don't really need, to be honest. I hardly ever look at the economic calendar, maybe once a week. And, I just skim through these data points. That's it. It doesn't take me that long. So that's all for this video. I hope it helped. I will see you guys on Tuesday. Stay safe. Wash your hands. Peace.